Hello folks, today we are going to look at gold in different currencies around the world. We're going to look strictly at the monthly time frame because we want to focus on the big picture. Those are the currencies we're going to look at. And then as part of the charts we're going to look at today, I want to make a special tribute, thank you to Dr. Timothy Morge, rest in peace, and his crayon drawing. And I'll talk about crayon drawing as we look through the charts. And for those individuals who are unaware, Dr. Morge, he lived from 58 to 20, so recently passed. As a young man, he was fortunate enough to learn the Andrews Pitchfork technique directly from Dr. Andrews. And then Dr. Morge had a 40-year career of both acting as a trader and then a mentor of other traders and financial professionals, and largely based on Andrews Pitchforks and the techniques that Dr. Morge developed himself. Very smart individual, holder of 3 PhDs, math, physics, and economy. I believe that all 3 of those degrees were from the University of Chicago. What attracted me first to Dr. Morge is the consummate educator, that not only is he a smart man with lots of good information that I wanted to learn, I could tell that he had taken the time to also learn how to be an effective teacher. And, that's why I signed up for expensive mentoring and teaching courses from Dr. Morge. And then one of the things that Dr. Morge did as his 2 kids were growing up, there were a couple of years where he volunteered in local 5th grade classes, and he was teaching them simplified technical analysis and some of the techniques that he used. He'd teach the kids paper trading, and then they got to see how they could do paper trading the markets. And so anyway, and crayon drawing is one of the techniques that he taught to the kids. And so we'll talk about crayon drawing as we look at the charts. The benefits of crayon drawing, it's brainstorming. Or for me, I'm a visual thinker. And so crayon drawing helps me think visually when I'm looking at the charts, useful for long-term planning. And then it works. And that's kind of the empirical method. If it works, it doesn't matter what the science is, it works. This is the gold in the US dollar, and we looked at this chart just last week. Head and shoulders pattern, working on finishing out the right shoulder. Perhaps that's what I believe is going on here. Depending on how you want to forecast based on the head and shoulders pattern, conservatively we get a target at 26.85, more aggressive target at 28.55. I'm expecting, and I know folks, that it's 21st of November, and I'm still expecting that we're going to hit that price target in gold in the next 5 weeks or in the next 2 to 3 months. Wow, that's a mouthful. So let's continue. This is gold in the US dollar again, and in the monthly time frame. So this is the first crayon drawing technique we're going to look at. And so it's as simple as, okay, I'm going to take my crayon and I'm going to draw the length of a price up leg. And then I'm going to clone or duplicate that line. And I'm going to take it and I'm going to put its origin wherever I decide to put the origin. Let's say that price is going to waffle sideways for a couple of more months. I don't think it is, but we can pretend that it is. And so price waffles sideways and then it takes off and does its thing. And then we can look at, if we want to, and again, we're just spitballing. These are crayons. We're kids. We can color outside the lines if we want to. Got the big box of 24, maybe the rich kid over there, he got the box of 48 crayons, so he's really styling. Of course, truth is he only uses 3 because he's a Momo, but we don't have to go there. And I shouldn't have said that. I apologize, folks. So anyway, crayon drawing, we're just spitballing. And so we can look here, potentially that's a price target at 2,600 US dollars. And that's in March of 2024 time frame. One of the first things I noticed when I looked at this chart today is that this price movement. So we get this impulsive price leg, up leg, and that is impulsive movement in my opinion. And then we get this pullback. My eyeball at this point, I pretty well guess that that's about a 38% fib retracement, but just to make sure I'm not leading anybody astray, including myself, or most importantly myself. I like to use, this is the Fibonacci retracement tool, and sure enough we can see that, price did its thing, and now we've got a 38% Fibonacci retracement, price waffling sideways. And in my opinion, this is halfway marker, halfway point, continuation of this impulsive price movement. The target is, 2,600. And of course, it's the same thing we just looked at here. There it is, 2685. Just a different way of getting at the same thing. Andrews Pitchfork, this is a shift pitchfork on this price chart. I like it. It looks pretty good. Not unreasonable that, it will come into play in coming months. Obviously, the next target is the previous high, and then off to the races, new highs. Energy, based on stochastics, is rising, kind of mid-range right now and rising. MACD was way up here at the overbought level. See, MACD got overbought back here at the end of the bull market in end of 2011, early 2012, and then we went into the the subsequent multi-year, 4 or 5 year correction, and now it appears that we're in a new bull market. MACD reached that same overbought level, but has now had an opportunity to pull back and appears to potentially be basing or bottoming at this level in preparation for the next up leg. And one of the things that I look at in regards to MACD is whether it is in bull mode or bear mode. Bull mode is when both indicator lines are above the zero midline of the indicator. So clearly MACD in this vehicle, this time frame, is in bull mode, and that suggests that the primary trend is up. And that's my premise as well, is that the primary trend in gold is up. And as we will see today, not only in the US dollar, but in all fiat currencies on planet Earth right now. Well, I can't really say that. There's at least 70 currencies, and I don't have the patience. And like I said, we keep seeing the same thing. It's it's the same pattern repeated over and over. This is gold in the Australian dollar. Again, we're still in the monthly time frame. This is a little bit more me having fun. First thing I noticed on this chart was that price obviously have a channel that it was operating in, but I noticed that these price points, these three price peaks appeared to be on the same line. And so I started on this chart by drawing the midline of these two channels, and then I did a clone of that line to get the parallel for potentially what's the bottom of the channel. I don't really care about the bottom of the channel because I don't think we're going to revisit it in truth. And folks, I have to acknowledge I'm horribly bullish when it comes to the precious metals. And so I always have to remind myself of my bullish bias. And so anyway, that was the first part of my crayon drawing, was recognizing that potentially we have a price channel there. And then the second technique, and this is Dr. Morge. These techniques he taught in some of his advanced material and then taught privately to people that he mentored. And so the second technique is called double the. And so when we identify a price channel, what we do is we take the width of that channel and we double that line or clone that line, and then we project it above or below the current channel. And not uncommon that if price breaks out of this lower channel, it will then channel in the same range at the higher level, double the range. And we can go back, I forget which chart it is. There's an example of that in the current charts that we've looked at last week. And then another, this is the same idea, so third technique now, so this is the same idea that we just looked at, crayon drawing again. This basically, I'm using an ellipse to measure the length of that impulsive price movement, and then I just double it, clone it, and project it. And this is, again, these crayons. I crayon drawing on a piece of paper, it just happens that it's a price chart. And so I project that bubble forward, and, I can look at, April, March of 24, where might price be in, 3,300. Same concept if we got another leg upwards, some sideways consolidation here for some period of time, and then another up leg, there's 4,500, and potentially out in the May 2027 time frame. Who knows? I mean, I could be wildly wrong, could be incredibly wrong here. But again, we're brainstorming, we're thinking, we're long-term, we're looking at possibilities. What are the possibilities here? And how do I want to trade this? Do I want to take a zinger? Do I want to take a small position on the idea that by March of 2024, gold in Australian dollars is going to be at least $3,300. I mean, I'm sure I could go find a leveraged vehicle, an option of some sort, or a gold futures would let me leverage that bet if I chose to. And I'm not suggesting that that's a good idea. I'm just talking possibilities again. And notice again here, I didn't put the Fibonacci tool on this. My eyeball says that again, that's a 38% Fibonacci retracement, marking the point of an impulsive price movement. And notice a perky price bar. We had a nice price bar there last month, and one more week to close out that price bar. So notice that that price bar is breaking out at this point, assuming that it closes above that breakout level. MACD again has worked off the overbought level, but appears to be potentially bottoming and turning back up. Bull mode. Energy is more elevated here, and actually quite elevated and rising sharply in the Australian dollar. In the francs, it says same story, impulsive price movement, pullback, sideways, halfway point, impulsive movement, 71,000 in March of 2024, elevated energy, MACD turning back up. I'm sorry if I'm sounding like a drone, but it's the same story pretty much in all the currencies that I looked at. And when I had that realization, one of my thoughts was the reason that is true, or one of the reasons I believe that is true, is that we're essentially measuring gold. Gold is a constant. Gold is gold. I mean, gold just is. We talk about, gold's $1,800 or gold's $2,000, whatever. No, gold is gold. What we're looking at in the price charts is, okay, what is the price of gold in this fiat currency today? And, is that meaningful or not? Who knows? It is what it is. This is my point. I believe what we are seeing is that all of the fiat currencies on planet Earth have reached the end game at the same time. And that's why all of these charts look essentially the same, is because this is gold measuring the value of fiat currencies, which are all essentially worth zero at this point. I mean, you can argue about 0.3. The US dollar, depending on how you want to measure it right now, is like 0.3% of its value in 1913 when the US Fed came on the scene. That's neither here nor there. So back to the charts. The yen didn't really lend itself to the same kind of analysis. And of course, I was reminded when I was looking at this chart and kind of puzzling over, okay, what's going on here? Japan has been, they've been running their printing presses 24/7 for the last 25 years. I think we're going on year 26 of basically just blatant full out money printing. Abenomics, they referred to it there, or maybe Japanese economists didn't call it Abenomics, but that's how it was referred to outside of Japan. So anyway, let's move on from the gold and the yen. Here we are in the euro. Again, notice that big strong bar in the current month. Energy very elevated. MACD, again, we've worked off, pulled back from that overbought level and appear to be turning back up for the next up leg. Crayon Drawing potentially gives us a price target up here at 2100 in the March of 2024 time frame. I didn't look at a percentage. What is that? So we're at 1635. What's that, $450? Is that 30%? So a 30% rise in gold and euros in the next 2 years, next 2 years, a little over 2 years for a 30% rise. And that's probably, what most of these charts are showing. Although I haven't done that analysis. I hadn't looked at the percentage gains. Here we are. This is gold and Canadian dollars. Same story in MACD. Energy rising, currently about mid-range. This is a shift pitchfork. Very nice interaction between price and that fork. And when I see an Andrews Pitchfork, or actually it's when I see price interacting so nicely with an Andrews Pitchfork, I know that the fork is valid, and I assume that price will continue to interact with that pitchfork until there is some decisive change in price's behavior. And so that's why I leave valid forks on my charts for a long time, because they stay valid for a long time. And then we have a smaller, this is another shift pitchfork obviously on a smaller time scale, and you can see that they're both suggesting potential targets up there in the 3400 range in that March 2024 time frame. Yeah, British pounds, same story. I don't need to belabor the point. Folks, I'm less than 20 minutes. I'm going to feel good, and I'll cut this down some by cutting out the long pauses. So that was analysis I did for myself, and I wanted to share it with you. Wanted to get the 10,000 foot view. What's gold doing in the monthly time frame and in multiple currencies, because as Americans, we tend to be very America centric in our focus. So anyway, have a fantastic week. See you, folks.